I bet. So I also draw my entry zone. How do I identify my entry zone? It's going to be from the opening of the candle to the 50%. Now, this specific area is where I would really like to be able to see my rejection happen, right? Now, from here, you guys know I usually set buy limits and sell limits, which means I need a specific entry. I can't technically do a zone for a pending. Okay. So what I'm gonna do is I'm gonna take the fib one more time from the top of that engulfing candle to the lowest point before the market started retracing. And you guys know for my entry, I want to be able to utilize a fib level that falls within my entry zone. So pretty straightforward. We ended up taking advantage of that 78.6. I'll kind of just let this play out just so you guys can see. And as you guys see, basically from where the market is now, we got a beautiful wick reaction. Obviously, the market went a little bit higher. Drawdown, as you guys know, regardless of what you've been taught, drawdown doesn't matter. The only thing that matters is, does it hit your take profit? Does it hit your stop loss? Anything in between, that shit really doesn't matter. Okay. So we did get a little bit of drawdown, not a big of a deal. The thing I want you guys to focus on is, that your entry was good, because if the body of the candle does not close above your entry for a sell, you did a good job. So pat yourself on the back. So notice how even though this wick aggressively went above my entry, it closed underneath my entry. Okay. That's beautiful. That's exactly what we want to see, right? And here's the market right now. We did come and break this low, which was our first TP. It was about a 3-to-1. So beautiful trade. I'm obviously still holding it, looking forward to drop a little bit deeper. We are at break even. So that was a beautiful, successful trade. And as you guys can see, here we are right now. Okay. So this is my take profit too. I already have an alert set. Appreciate the audience in the back. Appreciate y'all. Appreciate y'all. So as y'all can see, a successful trade. And like I said, I'm still holding it. My break even is here. And like I said, I just let the trade either hit break even or keep dropping. I don't manually exit anything because you're going to leave money on the table and you're going to end up punching a wall if the trade keeps going in your favor. Okay. Also, what I'm going to talk about today is how I'm able to identify my break even. Because the way that I do break even is different than other people. In my opinion, I don't do break even based off of, oh, I'm 20 pips in profit, go break even. I have to have some type of structured break on a lower time frame to go break even. So yes, sometimes in situations I do put myself, like for instance, the gold trade that we lost this week. For the average person, that wouldn't have been a loss. That would have been a break even hit because it went 70 pips in profit. Now you might be like, Tyree, why you didn't adjust it to break even if it went 70 pips in profit? Because I didn't get a break of structure. So I'm okay with leaving my stop loss open because I've seen more times than not, I want to be able to allow my trade a chance to breathe. I don't want to adjust stop loss to break even too soon. It comes, takes me out, and then goes in my direction. So I'm okay with having some scenarios to where I go deep in profit. It might reverse on me. It's rare. The gold scenario to where it went 70 pips and came all the way back and hit stop loss, that's rare. Okay. There's not too many situations like that. Like I can literally name only one other trade that happened like that. It was like CHF JPY from like 2 months ago. It went like 30 pips in profit, didn't break any structure, reversed, hit my stop loss. It's all good. But like I said, y'all have to be able to understand what works for you and what you're comfortable with. So I always want to remind y'all, just because I don't say I'm going break even, your trading account is your personal responsibility. So if you feel like you're in a good amount of profit and you want to go break even, that's totally up to you. I'm going break even whenever I drop it in the chat and give y'all the update. If y'all don't see me say I'm going break even, my position is still open. Okay. So that was CAD JPY. Now we're going to go to GBP Chef. GBP Chef, as you also can see, is in pretty significant, went for a nice drop. Hopefully it doesn't hit a side at break even, but if it does, it's not that big of a deal because we already made money. So let's go ahead and go over that real quick. And then, we'll finish off the rest of the call by taking our time and going over Euro GBP because I think Euro GBP could be good. It's Euro GBP is a little, it could kind of go either way. I'm gonna kind of break that down. It did give us a really good reaction. I don't like getting excited and trading I don't get excited until I go break even because I've seen a lot of setups give you a wick entry, react, and then it just goes and hits your stop loss. So I'm not gonna be like, oh, this right now, what we're seeing, it doesn't matter, bro. It literally doesn't matter. Okay. Now it would be nice if the market, leaves like this. I'd be like, oh shit, we in that thing. So let's go ahead. Actually, let me move this to my active folder. Euro GBP green. I bet. What we're talking about, GBP chef. All right, GBP chefs. So same concept. I'm gonna rough draft this just because, like I said, any setup that we've taken and we're currently in, I've already broken it down probably over multiple Zoom calls. So I don't want to take too much time on this, but I definitely want to be able to recap because we haven't spoken about it since it hit take profit. So GBP chef. All right. All right, cool. GBP chef. Now, let's go over GBP chef. So similar concept, right? Let me go ahead and wait, where's my entry? Oh, up here, off the wick. Okay. So we'll do this right here. All right, cool. So similar concept, right? From the 1 hour time frame, I want to be able to identify the overall trend of the market, as well as my directional bias, momentum, and so on and so forth. Now, I know on the last one I didn't go over, like the RSI and stuff like I usually do. Like I said, I'm just kind of speed through this, so I'm not really going to worry about like showing y'all divergence and all that on this. That's just going to take up too much time. We're just going to focus on just straight price action. We'll get into the other stuff on Euro GBP. So similar concept. The overall trend of the market should be pretty apparent. You might can say, depending on what you're looking at, you could say, possibly it's an uptrend because it did break this significant level of structure. But overall, it's obviously a downtrend. We could say that this might be a temporary uptrend or a temporary buying model within the overall realm of it being a sell. Okay. So overall, it looks like a sell, but temporarily it could be a short-term buy because we did get this break of structure. That's pretty significant. Okay. So what I was looking for is I'm looking for a continuation for this sell. Why am I saying that? Even though we did break this high, which could symbolize we're looking for a continuation, what I noticed was whenever we broke that high, okay, the market created a new high, right? This high was broken and then gave us a very aggressive fall off. So possibly this might have just been a liquidity sweep. It might have not have even been a valid break of structure, just depending on how you're looking at it, okay? A retracement after you break a high might not necessarily be this deep. This might just mean the market wants to keep selling out. This might not be a retracement to continue higher. That's how I was looking at it, right? The next thing I was also looking at is notice how the market ended up coming all the way back, but it didn't break this high. Okay. So what you want to start looking for is whenever the market comes back to a previous high or a previous low and it doesn't break it, that might mean that it's going to hold. So if it holds, what does that mean? The market rejects off of resistance, it's probably going to sell. If it rejects off of support, it's probably going to buy. So since this was a resistance and the market didn't break it, not only did we get a reaction, okay, we also got what? A break of structure. And the market actually gave us relatively equal lows, which is what we love to see, right? What do equal lows represent, right? Depending on how you were taught, you might look at it as a double top or double bottom. We don't necessarily look at it like that. We look at that as liquidity, or we look at that as a take profit. Basically meaning those areas are going to represent stop losses that are being built up for people that are in buying positions. And the market is leaving a footprint saying, we don't know whenever the market is going to come take those places out. Let's make that clear. But we're looking for reasons to be able to get in on the trend whenever the market goes and capitalizes on those opportunities. Okay. So since this is going to be built up liquidity, right? And we notice that this high did not get taken out. The next thing I could do is I can actually take out my fib. You guys know I love the fib. See how deep of a retracement we got. So as expected, right, we got the deepest level of retracement, which is going to be the 88.6. Okay. On top of that, what do we notice? The market actually gave us an M formation, okay, which is a selling formation. Let me draw it out for the people that might not be able to see it. Maybe anybody that might be new on the call. So this is an M, okay? An M formation is a sell formation. That's one of the simplest formations you can learn in trading in general. It has nothing to do with Forex, okay? So not only did I notice that, but similar to how I showed you guys on CAD JPY, what did the market actually leave us, right? Another footprint, right? That footprint is going to come in the form of an imbalance or inefficiency, depending on what you refer to it as. Now, in a similar way that we were looking at CAD JPY to come back into the imbalance before we took the continuation to the downside, that's the exact same way we're going to be looking to take your GBP chef. So what I want you guys to notice is, notice how the market is building liquidity, okay? What does that mean? is giving stop losses that they eventually want to come take back out, right? All these little areas are areas that the market probably wants to be able to come back and get, right? Nothing is a guarantee, but we're just basing it off of previous information that we are absorbing, okay? So now that I see the imbalance, now that I understand my directional bias, now that I see that we got a break of structure, it did not take out this high, right? Overall model is a sell. What do I want to do? I want to now look for an entry. So same thing that I always tell y'all. I look for the biggest candle and the highest time frame, okay? Very straightforward. I think it was I'm a cheat. It was a 9-hour time frame. All right. So in a 9-hour time frame, we ended up getting our best looking candle, okay, which was the 9-hour candle that you guys see right here. So how do I start off? I want to take the 50% of that candle, okay, like so. What's the next thing I want to do? I want to create an entry zone, like so, which is from the opening to the 50%. So now what I've identified is this zone is where I would like to be able to see the market react from. So as you see, the market has actually already been reacting from the zone, but it hasn't gone anywhere. Okay, hasn't gone anywhere. It keeps returning to the area. So what I then finally want to do is I want to take my fib one more time from the high of that candle to the low before the market started retracing and see if we can find an entry. Where am I looking for my entry? Within the entry zone. So within the entry zone, as you guys know, I want to be able to look for a fib level that falls in the entry zone, which we see at the 71.6. So in the grand scheme of things, as you guys see, beautiful reaction. Once again, what did I tell you guys? A way that you can start figuring out how good of an entry you have. Does the candle close underneath your entry for a sell? Does it close above your entry for a buy? Right? Obviously, you need the market to push above your entry to bypass spread and all these other things to fill the trade. But you want to be able to know, okay, did I actually get a good entry? Yeah, you did. Why? Because the candle closed below your entry level. That means that was a pretty valid zone that you identified. And now where we are, like I said, we are pretty much at break even, and we're just going to let the market basically play out and see what else it wants to do. So that's pretty much it. So let's go ahead and go to Euro GBP. This is where we're going to spend. Oh, that thing. Hey, Slick, that thing pushing kind of nice, my boy. That thing pushing kind of nice, my boy. I'm not going to lie to you. I'm not going to lie to you. That's looking kind of sexy. You feel me? It's looking, I don't know if any of y'all ever seen Borat. Does anybody remember Borat? The favorite thing Borat used to say is very nice. Very nice. That's what that looks like. It looks very nice. Okay. Yeah, I'll be honest. At this point, I'm still not excited, but the way that this market is pushing like this, I'd be surprised if it doesn't continue. Because now, what are we forming? An engulfing candle. As you guys can see. Man, shout out to the wick entry. I'm going to be honest with y'all. I'm glad I called a market execution because I can't guarantee that this would have activated a buy limit. I'm going to come clean. I can't guarantee this would have activated a buy limit. Let me see how far that went down. Half a pip. What's the spread look like on Euro GBP? It might have activated. Euro GBP usually don't. Yeah, it actually could have activated. Euro GBP spread right now is like half a pip, so it would have been close. It would have been close. So I'm glad I called out market execution. So we for sure got into it versus it could have been some nonsense to where it and it depends on your broker as well too, because I have a couple of different brokers. So one of my brokers, it definitely wouldn't have activated. So shout out to me for doing market execution. Anyway, so let's go ahead and break down Euro GBP. So as you guys know, I actually called out Euro GBP yesterday and deleted it just because it did not activate within the time that I want a trade to trigger. So if you guys ever notice, whenever I say delete a trade I did, it's always going to be around the same time of day. The close of the London session is 10 a.m. Central, 11 a.m. Eastern. My rule of thumb, okay, this is what works for me. If I have a setup that does not activate by time the London session closes, I have to delete the trade idea. If the trade idea is still valid when it comes back in session, I'll simply call it out again. That's literally what I just did for Euro GBP. I deleted it. It was still valid. Now that we're about to approach the London session, I called it out again. That's it. I feel uncomfortable holding a buy limit or sell limit if the pair is not in session, because I don't want it to activate if it's not in session. Okay, that's actually saved us in a few scenarios to where I delete something, it's not in session, it hits a stop loss, but we weren't in the trade because we deleted it because it wasn't in session. So let's go over this, right? Now, Euro GBP, man, I really feel like this definitely can be, that thing is pushing, bro. Oh my goodness. I see it, Euro GBP. That's slick. That thing is pushing, my brother. That thing is pushing. So, the thing I like about Euro GBP, let me explain something to you guys. This is actually, I could do, let me hit y'all with this real quick. This is a perfect time to be able to do this. Pull out the trend line tool. Passive phase 2 with it. Straight up. So look, let me actually get a good look at it again. Yep. Okay. So look, this is what I want to do. I want to show y'all a model. So look, the market, remember when I told you guys about like the double tops and double bottoms? Okay. Right. Now, what I want you guys to focus on is, notice this area right here. This is actually like a triple bottom. It's definitely a triple bottom. So let me do one more. All right. So we got a triple bottom in the market, right? 1 touch, 2 touch, 3 touches. Okay. Now, what I want you guys to notice is, notice how this wick dipped below this area. And then what did it do? It took off. Like it went crazy, right? Went crazy. Okay. So this right here, how I was telling you guys, this would be our liquidity. Okay. This is the stop losses that are being built up by the people that are looking for buying opportunities. And the market is basically leaving that to be able to come back and take out at a later time. Now, where we come in is, we don't want to get in when the market comes back to this area. We want to see if the market takes out this area first, which is what happened. So notice how basically what the market did, right? If you look at this area right here, notice from the last push, okay? Notice from the last low that was formed, right? The market pushed up a little bit, okay? It did not take out these highs. And then what did it do? It came, dipped below, and then it eventually exploded to the upside, which then did what? Broke this level of structure. So this would be a BOS, okay? So this is a model that you guys want to be able to start getting used to. Why do I say that? Okay. This is almost like textbook. This is almost like a textbook setup, because what you're now looking for is, you're not looking at this like, oh man, I missed out. A lot of traders are going to be like, oh man, damn. I missed it. It's like Slick. Man, I missed it. Damn. Butters. Oh man, I missed it, bro. Man, did you see Euro GBP? It's like, oh man, I missed it. I fell asleep. It's like, nah, bro, you're actually just getting warmed up. Because what actually just now happened is, the market just confirmed to you that what? This was a downtrend. So what do you not want to do in a downtrend? You don't want to try to catch a falling knife. You want to wait for the market to say, hey, I'm ready to switch directions. This that I'm showing you guys is the market symbolizing, hey, I'm ready to switch directions, okay? Now, after you get the market to take the liquidity and sweep out these stop losses, and you get the break of structure, all you need to do now is wait for a retracement to then take the continuation, okay? Ladies and gentlemen, this is exactly what we are witnessing happen right here, okay? Might not look exactly like it, but it is extremely similar. So look, 1 touch, 2 touch, 3 touches, right? 1 touch, 2 touch, 3 touches, because it's 2 touches right here, right? The market goes up a little bit, but it doesn't take out this high, okay? Goes up a little bit, but it doesn't take out the high. Drops very aggressively right underneath this area, shoots up, breaks the last level of structure, which would have been right here, gives a retracement, okay, to this area. So let me actually show you guys something. This is actually a good learning tool. So one of my rules as well, which oh man, it hurts a little bit. It's actually something I learned today. Believe it or not, this is a setup I was going to send out. As you guys can see, it would have hit the first target. I didn't send it out. I didn't take it. One of my rules that I'm very specific on, I'm gonna show you guys because I was not able to take this just because I'm working on my discipline, so I don't want to break any rules. So I'm gonna show y'all one of the rules that is the reason why we didn't get the initial setup for Euro GBP, but we're getting into re-entry. Now, if I'm gonna be real, the initial setup I wanted to take on Euro GBP, I'm gonna show you guys real quick. I never called it out because it just didn't, it wasn't the right time of day. This is what I originally wanted to take, this 15-minute candle right here. Okay. That's what I originally wanted to take. Now, remember what I told you guys? I don't like taking trades that don't happen in the session. It hit this candle in the Asian session. Euro GBP is not an Asian session pair. It's a London session pair. So the market hit this candle in the Asian session. Regardless of how I feel about the setup, I'm not going to take a trade if it's not in session. So long story short, that's why we didn't get the initial move, right? Shout out to a Starboy from Steady. He called it out. But like I said, I don't like taking stuff out of session. That doesn't mean that you can't do it. That doesn't mean that it doesn't work. It doesn't mean you're not going to make money. I just know more times than not, it's probably not going to benefit you. This is one of the examples where it could have benefited me, but you can only know that after the fact, okay? So this initial reaction happened from this 15-minute candle over here, okay? So that's why I feel so confident about this setup, because now that I see that the market, actually, let me show you guys. Let me do this real quick so you guys can actually see where it reacted from on this candle. All right. So look at this, right? Look how perfectly it reacted off of that candle. So these two orange lines are going to be the opening and then the bottom of the candle. So if we would have taken this trade, knowing that our stop loss would have been a little bit lower than this orange line, it would have been beautiful, right? It literally would have been beautiful. But what did I say? I don't like taking trades out of session. But because I see that this candle held, right, that's why I felt so confident knowing, okay, this is another opportunity to be able to get in on the retracement for a possible continuation. Now, as usual, I'm always going to repeat, nothing is a guarantee. All right. This trade can hit stop loss right now. I don't know. Right. That's why you never over leverage. Right. Hint, hint, hint. So that's why I like this market to be able to begin with. So not only did y'all see this model that I drew out, you also see where this initial reaction came from whenever the market basically threw this W, right? It's another you got M's and W's, right? So W, that's a W. Okay. And actually, what I think could be happening possibly, this right here. So I don't know if you guys know what the market maker cycle is. I love it. Okay. So if you guys notice, there's an M up here. There's a W down here. 1, 2, 3. What does that represent? Okay. If you guys don't understand what a midweek reversal is, what is today? It's technically Wednesday. It's the middle of the week, right? Something else I'm gonna show you guys, okay? I believe, if I'm not mistaken. Yep. Peep this, right? Now I know it's a lot going on, so I'm gonna explain what I want you guys to actually focus on. So if you guys pay attention to this orange line, this represents a previous weekly low, which means what? This was a previous weekly low, and what did the market do? It swept it. I'm gonna repeat that one more time for anybody in the back that didn't catch that. This was a previous weekly low, and what did the market do? It swept it. Now, why is that important? The reason why that's important is because if the market takes out a previous weekly high or low, it might not have to come back to that area because it's already done what it has to do. Which means what? The market could not have a reason to go lower anymore. It might have all of the reasons to start pushing up. We've already taken our liquidity right here, okay, from the previous week. And the reason why I'm showing you guys this is because this is called the 3-day cycle, right? The 3-day cycle basically means whenever you get a midweek reversal, keep in mind, I'm not saying it's going to go up for 3 straight days. It's nothing. Everybody knows nothing is textbook. It might go up for 1 day, pull back. It might go up for 2 days, pull back. We would like it to go for 3 straight days. That might not happen. Okay. All I'm saying is, from the information I'm giving y'all, what could potentially happen, the market might now go up for a total of 3 days, right? Max. Obviously 3 days is not the max. It could be a week. It could be a month. You understand the concept that I'm saying. So what did I just show you guys, right? Notice this W, right? You guys notice this W down here? I got an M up here. I got a W down here. The M and the W is initiating the cycle. You guys see this right here? Look at this. This is the reason why I will never change this screensaver, bro. This screensaver has made me so much money, bro. Look at this right here, right? You guys notice it says type 1 London pattern. So shout out to Tyrone. If you guys don't know what the vector, I know Butters knows what the vector is, right? And my boy Butters be on the DeLorean. If y'all don't know what the vector is, okay? The vector is basically what I just showed you guys, right? The market creates consolidation in the Asian session. It sweeps a lower, sweeps a high, and then it explodes in the opposite direction. Tell me that this type 1 does not look like this. Tell me it don't look like that. It looks exactly like that, right? Come on, bro. It looks exactly like that, right? The market sweeps down, throws a W, shoots up. This is the same shit, okay? This is the possible start to the 3-day cycle. Notice it's not by coincidence that you see a W right here, and then what do you see? An M at the top, but that's after you've already gotten 3 pushes higher, right? 1 push up, pull back, 2 pushes up, pull back, 3rd push up, the market is exhausted, and it repeats the same thing in a complete opposite direction. All right. So what I'm possibly looking for is, like I said, that's why I'm getting kind of excited. Like anything else, like I said, nothing is a guarantee. But from what I am saying schematically and price action wise, this possibly could be a 3-day cycle. And it is in the middle of the week, which is why I keep referring to the midweek reversal. Right? Why is the midweek reversal important? Because a lot of times the market is going to give you that reversal in the middle of the week after it's been doing what? Going in a given direction for so long. One thing I learned from Starboy from Steady. Okay. Let's look at how fast this market went up and how long it took it to come back. So from the low of this candle to the peak before it started retracing, it took 4 days, right? How long did it take for it to come back? 2 weeks. Why is that important? Whenever the market goes up or down really fast and it takes a really long time and it's extremely choppy to come back, that is a footprint that the market is showing you what direction it's looking to go in. So if the market pushes up in 1 day, but it takes a week for it to pull back, it's probably pulling back really slow because it's about to continue going up. So what I'm showing you guys is a whole bunch of confirmations and confluences that gives me the confidence to be able to take the trade. All y'all have to know is trading is all about building confidence. Nothing I'm saying technically guarantees we're going to win this trade. It just gives me confidence to take the trade, which is the most important thing, right? Mark Douglas says you have to work on eliminating fear whenever you take a trade. That's all I'm doing by having all these different confirmations. I'm eliminating fear, right? So now that you guys are seeing all these different confirmations, we now need to get to the meat and potatoes. Why did I enter where I entered? Okay, so I'm literally telling y'all exactly why I'm looking for this, where I wanted to go, all this other stuff. It might be 3 days up, you know what I'm saying? All that stuff. So now we got to look for the entry, okay? So if I were to scale this back, okay, I'm going to tell y'all, I really basically have, it's basically the same entry, give or take a couple pips that I said from last night. So You guys know I love the higher time frame, right? We on a goddamn 12-hour, okay? Why are we on the 12-hour? Well, goddamn it, I'm gonna give you the answer. Don't even worry about it. You know I got you. So after we see our W being formed, we see that there is imbalance up in here, but there's no engulfing candle. So we're gonna go to the 2-hour. No engulfing candle. 3-hour. That candle's already been mitigated, so we can't trade off of this, right? 4-hour. Okay. Okay. The 4-hour is our first opportunity. But remember, I want the biggest candle on what? The highest time frame. We're gonna go to the 5. No candle there. Gonna go to the 6. No candle there. Gonna go to the 7. No candle there. Gonna go to the 8. No candle there. The 9, the 10. The 10 has one, right? Right here. This is a engulfing candle / institutional candle. But is it the biggest one on the highest time frame? No. Look at this. This is the biggest candle on the highest time frame. So that's going to be my entry candle, right? Now, you guys know how I get down. We only got about 5 minutes. I've actually did this perfect timing. You guys know how I get down. So now what am I going to do? I'm going to take the 50% of that candle, okay? 50% of that candle, bam, right? Then what am I going to do? I'm going to draw an entry zone, okay? Like so. I'm going to draw my entry zone. All right. Now, from here, what's the next thing I'm going to do? So I got to actually let this play out so we can pull out the other fib, okay? So I got to take my fib from the low to the high, okay? And what I want to see, I want to be able to see what fib level falls within our entry zone. All right. And as you guys see, the reason why I'm going to tell y'all why I didn't take the 71%. The 71% had already been touched. Okay. So for me, whenever I take a London session pair, I can start looking for opportunities at 1 a.m. Central. So an hour before London starts is whenever I can start looking for opportunities. If y'all notice, I don't have to wait until London opens to take a trade, but I have to wait until the hour before. Like I said, that's really just from back testing. I can't really give y'all like a specific reason. It's just from back testing. I just saw that, okay, there are good opportunities before London. I just can't do it so far ahead of time. It's just that 1 hour. So 1 a.m., the hour before is really the only opportunity. So if it's midnight and there's a good setup, I got to wait that extra hour. So the reason why I called out a market execution, literally look at this. Look at the picture I sent out. Look at this. You see where the market was when I called out market. That's why I had no choice. Think about when I called this setup out. I called it out at 104. Everything I'm telling y'all, I'm very, very specific. I was literally, the reason why the call started late is because I was typing this out knowing I was going to have to send out a market execution and I wasn't going to be able to send out a buy limit. Look at the picture. It was basically already damn near touching the entry, but I'm like, I got to wait until 1 a.m. I'm very specific. I'm not going to take a trade 5 minutes before the session. I got to wait until the hour hits 00. That's why literally I called it damn near exactly at the dot. Okay. So that's why I had to call a market execution. I couldn't call a buy limit because the trade was basically already at entry. So yes, I normally would have used this one at the 71% because as I told you guys, I usually like using the entry closer to the opening, which is slightly more aggressive, but it makes sure that I get filled in the setup. Reason why I didn't look for this is because, like I said, by the time the session that I was looking to take the setup was about to start, notice the market was already here. It was already in this area. One of my rules of thumb, if the entry has already been touched before the session starts, I don't want it. That's just me, right? Everything I say is based off of me backtesting. So I'm repeating one more time. If the entry has been touched before the session starts, I don't want it. Okay. That's why I missed the AUD. That's why the AUD NZD trade that I just showed y'all. moving forward, that setup I'm not gonna miss because I have something that I'm actually working on. But I miss AUD NZD because it hit my entry like I think it was like an hour before the session started. So because of that, my brain was just like, I just can't take the setup. This setup was a little bit different because I had multiple opportunities, but long story short, that's why we're using the lower fib level. Whenever I know normally I teach you guys, I use the higher fib level because this fib level had already been violated before the session started. So I was like, okay, well, I'm gonna just look to use the lower level. And as you guys see, it gave us a pinpoint entry. And we really just want to be able to see the market continue to push up. So let me get rid of all that. All right, so we pretty much broken down everything at this point. Yeah, that's pretty much it. Let me get you guys to type where can I find that picture you had as a background? Google. I literally got it from Google. I'll see if I can just go find it for you. It's just market maker. Oh, you found it? I bet. Yeah, so market maker cycle. That's also the name of the indicator that I use. If you guys don't know, the matrix. If you guys notice the matrix, if I go to indicator, MATRX, market maker. It's the same shit that you see right here, market maker. Okay. And that's this indicator that y'all be seeing that has a gazillion different things going on, but I know what I'm using it for. If y'all just use it and don't actually know what all this shit represents, it's just gonna be more confusing and probably detrimental. So yeah, so as you guys see, like I said, I mean, it looks good right now. I'm not jumping for joy. I'm not necessarily super excited, and it's whatever. I gotta actually see the market. And honestly, I'll give y'all another example. I'll even tell y'all when I'm gonna go break even, okay? This is how I define break even. I need a break of structure. So if I'm looking at this setup, right, you might ask yourself, okay, Tyree, where would you go break even after the market breaks this high? Why? Because that would be a break of structure. All these wicks are structure. So I don't want to adjust it to break even until I feel like I've broken some significant level of structure, because if I do it too soon, it can just come right back down and take me out. Right? Type a 1 in the chat if y'all feel like that made sense. This is literally where I would put break even at, because this would be the highest level of structure before it gets into all this imbalance. Okay. That's whenever I would adjust stop loss to break even. So what do I usually do? I set alerts. Y'all know me. Y'all know I'm the king of alerts. I'm about to set an alert right goddamn now. Shit. 83470. Let me see how many pips that is. 83470. It's gonna be about 21 pips. So 83470. Come on, you slow ass computer. 83470. And then I'm gonna type in my message. Up plus, what did I say? 21 pips. Adjust SL to BE. All right, cool. Just like that. That's how simple it is to be able to set the alerts. You see the orange line? So as soon as I get the alert, I'm gonna get a message to my phone, to my laptop. I'm gonna send an update to y'all, and then y'all can adjust your stop loss to break even. It's basically that simple. Wait, did I put that right? Yeah. All right, cool. Last thing I'll go over is how I found my take profits. Okay. Let me go ahead and because I know they usually play music for a couple minutes before they start. Let's see. Y'all know I'm finna hop on the goats. But like I said, make sure y'all tapping into steady, because Starboy actually caught this initial move that did this. I don't know if he's still holding it, but he did catch this initial move that I ain't gonna lie, was pretty nice. Because he only had like, I think it was like a 12 pip stop or some shit like that. It was disgusting. So the risk to reward on this initial move is probably like a 5-1. And they ain't even go nowhere. So that's amazing. Are they talking yet? Yeah, just talk about news, so nothing too crazy. All right, cool. So yeah, I'm gonna just be on here like another 5 minutes to break down my take profits, and then we're gonna be done for the night. So real quick, any favorite Starboy fave sessions you recommend? Axel, I got you, my brother. This is what I would recommend, Axel. Listen to me and listen to me closely. Starboy only has like 4 videos in his favorite sessions. So just watch all 4. It's not like a specific video to watch. But this is what I want you to do, Axel. Go to, okay, this is what I want you to do. Because obviously you guys know you have bounce back and steady. I more so learned from steady than bounce back, but I've went through the videos of both of them. I'm not gonna ask you to watch both of them because it's a lot. So I'm gonna just get you to focus on steady. If you venture out to bounce back, that's cool. But like I said, I've watched the videos for bounce back and steady. It's just I learn easier from the steady educators. So go to the Forex Pro Pack, assuming that you have it. Locate John Dollery, right? Click on him. Go to his favorite sessions. Scroll down to the bottom and start working your way up. This is like a boot camp, bro. Like literally. This is how I learned smart money. Outside of bounce back. I'm gonna keep repeating it because I don't want to make it sound like one is better than the other. It's not. It's just what's easier for you to learn. Steady was just easier for me to learn, and I've just been on steady longer than bounce back. So, but like I said, I've watched both, so I would definitely recommend watching both. But I started off on steady, so that's what I'm gonna recommend. So I would go to John Dollery, go to his favorites. As I said, scroll down to the bottom, work your way up. How to maximize your risk. Lesson 1. Mapping market trends, seek and destroy, price action candlesticks, price action and finding entries, Wyckoff understanding, Fibonacci implement, so on and so forth. So this is the bread and butter. I've watched all these videos like twice. Like I'm a go live junkie, like literally. Like for the first year and a half when I quit my job, I'm literally not exaggerating. I didn't go to a movie theater. I didn't watch Netflix. I didn't go to a sporting event. I didn't go to a concert. I didn't do nothing, bro. I was watching Go Live. I wasn't even really watching YouTube, if I'm gonna be honest. Like Go Live was television. If I'm sitting down at the table eating, I'm watching Go Live on my iPad. Like literally. That's like straight the fuck up. That's all I was doing. That's why I was able to power through all these videos so fast. Now, I'm not saying binge watch them because obviously that's more detrimental than it is positive because you're gonna miss out a lot of beneficial information. But yeah, Axel, to answer your question, I will go through John Dollery's favorite sessions. Now, to take it a step further, just because I want to show you both, John Dollery, and it's really up to you. I'm gonna give you the option, right? Because you might learn easier from bounce back. Because a lot of people that learn from bounce back over steady, to be fair. So also with bounce back, the way that you can learn from bounce back is they're right above each other. John Dollery is here. Bounce back is right here. Zach and Jordan. If you click on them and then go to their favorite sessions, same shit. Wait. No, actually, I think it's gonna be under. Hold on. Who would that be under? If it's not under them, I probably just got to get the bounce back website. That's so weird. They must have Oh, it's probably on the regular Forex channel. Let me see. Hold on, because now I'm determined to find this shit. Oh no, here it is. Yeah, I'm tripping. I don't know why they just did that. Yeah, let me go back. So yeah, I'm right. So same concept. So if you go to the Pro Pack, right underneath John Dollery, Zach and Jordan, click on them. I guess my computer was just slow loading. Click on favorite sessions. Why is it doing that? Click on favorite sessions right here. Scroll down to the bottom. As you can see, they got more videos, and that's why I said John Dollar because it's less videos, so it might be a little easier to go through. And then by the time you go through his videos, these are kind of be like more so like a walk in the park. But same concept. This is a boot camp in itself. All these videos, literally. And like I told you, no cap, I've gone through videos for both. I've went through all the steady videos. I went through all the bounce back videos. And then to take it a step further, I just gave you the website. I don't know if you know about the website. Bounce back actually has a website. Damn, I don't remember. Bounce back, like boot camp. Hey Butters, do you know what the website is? If not, I know Slick knows it for a fact. If you could type that in the chat for me real quick, I really appreciate it. I can't remember off the top of my head. Let me get you to type that in the chat for me. If not, ask Slick for me. I forget what it's like. Bounce back boot camp. There you go. Appreciate you, buddy. Bounce. So Axel, copy and paste that website in the chat. And you could keep in mind the website is still gonna direct you to go live. So it's not like it's not go live, it's their personal website, but it still directs you to go live. So either or, you can either go to Zach and Jordan and go through the favorites, or you can go to this website. So bounce back launchpad.com. I definitely spelled that wrong. Let me just copy this. Copy. Paste. Bounce back launchpad, and then I'll show you what it looks like. I can't stand my laptop, it's so trash. Why is it not working? Bounce back launchpad. Oh, yeah, okay, cool. There we go. My laptop is so trash, bro. All right. Why are you moving so slow? Okay. It's making me look bad. All right, there we go. About goddamn time. All right, cool. So yeah, so this is basically what it would look like. And then from here, it's basically it's a cleaner look than on Go Live. So like from the website, if you scroll down, you can see everything is actually in order. So for Axel, it might be better for you. So they got phase 1, all the videos in order. Phase 3, all the videos in order. All right. So hopefully that'll definitely help you, bro. That should definitely get you and then like I said, if you go to the chat, Butters actually put the actual link itself, so you can actually just copy and paste that link, and then you could just go directly to the website. I don't know why it wasn't working on here for me. That was tripping me out. Oh, let me go to Google. Bounce. I don't know why it took me to Internet Explorer. Bounce back. I'm probably spelling launchpad wrong. Oh, it pops up anyway. Okay, cool. Yeah. Cool. All right. Yep. That's it. All right, that's pretty much it, guys. So I appreciate all y'all for getting on the call as usual. Axel, I definitely recommend shit. Whenever you hop off, just go ahead and hop on this, as this is what I'm on right now for the John Dollar Rock Kumar. But outside, I appreciate you, Butters, appreciate you, Slick, appreciate you, Axel, appreciate all my regulars that hop on the call. And with that being said, I will see you guys tomorrow at the same time, 1 a.m. Central, 2 a.m. Eastern. And don't do anything in the market that I would do. Peace.